Well, the president's economic agenda really has consisted of tax cuts. And other than that, it's been the fundamentals of the economy, which have been sound basically for the better part of 2 years. The question I would ask is, what blunts the economy in the near term, and what's the definition of the near term? So no, I don't think that this episode is going to affect economic fundamentals. I think we have much more to worry about when it comes to the fundamentals in 2019 and 2020. This won't be a factor.
So if this is not to be worried about, what is?
Oh, no, I didn't mean to say it's not to be worried about. I just, in an economic sense, I don't think it's to be worried about. I do think that we have a problem in Washington, and it's clear now that there is a crisis of management, at least, inside the White House, and that there's a group of people, and there have been other media outlets reporting throughout the day and the week that this person represents dozens and dozens of other senior officials. So the problem is deep-rooted, and it's reflected in the style of the president and his management of the White House. That's a problem that's been around for a long time. It's surfacing now because of books that have come out and because of this essay.
Kim, you mentioned the potential economic problems that could surface in 2019 and 2020. I mean, even shorter term, we've got what's going on with trade, a pending deal with NAFTA, a pending potential deal with China. From an investor standpoint, even at the margins, should this be a concern? Greg Valliere of Horizon Investments wrote this morning, the spectacle of a president under siege may soon become disconcerting to investors around the world who want to see stability in the United States. We're looking at markets at peaks, basically, right now, at highs. And we've got these problems, as you so eloquently put it, looming. Even at the margin, do you see this could be a problem?
I think it could add as a trigger to the list of problems that Greg is referring to, and I think he's right. Going into the first quarter of next year, for example, not only do we have trade frictions with China increasing more than likely, the questions of what has happened to NAFTA and the effect of tariffs on the underlying economy. Mind you, we haven't seen real nicks to GDP because of tariffs yet, but that'll come in a lag basis. You also have fiscal uncertainty. The debt ceiling comes back to be renewed in the first quarter, and of course you'll have the fights over top-line spending that come back as we get closer to FY20. So there's a lot that markets will have to chew through, including ongoing concerns about China and its debt load, growth in Europe, and related issues down in Latin America. What's been keeping the markets able to ignore what's going on in Washington has been the fundamentals. But as the Atlanta Fed and others note, and consumer confidence, those are concurrent readings that mainly look backwards. It doesn't tell you anything about the future. The future is a lot darker than the previous year has been from that standpoint.
What does the idea that there are individuals in the administration and throughout Washington who are trying to thwart the president, what does that do to the president's ability to negotiate on behalf of the United States when leaders of other countries may say, what the hell's going on there?
Tyler, I think it's a great point, and it's not just people scratching their head about the uncertainty. It'll be some allies and a lot of adversaries contemplating maybe now is a time to test Washington, because you see that the White House is, for lack of a better term, broken, and that the relationship between, the institutional relationship between Congress and the White House is not as healthy as one would imagine in a unified government. And so I think that's a good point to pay attention to, both geopolitically and from a macroeconomic standpoint, as we get into 2019 and further.
Kim, do you think this has any impact on midterm elections? And if so, how do you think that shapes policy moving forward?
Another good question. If there's going to be an impact, it's likely going to show up in turnout. As we've seen in the Midwest and the upper Midwest, and some places in the South, tariffs have blunted the effect of what should be a buoyant electorate, not just the president's base, but other Republicans and some independents, and it's going in the opposite direction because those people are concerned that tariffs are going to change their lifestyle or at least change their company. And so you look for turnout. And we talk about strategic turnout. It's not the total numbers on November 6th or when all the ballots are counted. It'll be what is the turnout in those 50 to 60 competitive races that used to be 6 months ago only 20 to 30 competitive races. These are the numbers that Republicans in the House are looking at, they're concerned about, and that concern is not abating.